Welcome back, everyone. Today, I'm going to walk you through why I think San Antonio is going to appreciate almost 30% over the next 36 months. Let's get started. Thanks again, everyone. I'm going to walk you through today why I think San Antonio is set up very nicely for around a 30% appreciation forecast for the next 3 years. And before I get started, I want you to understand how I go about this. And I won't go into the deep details, but do understand that, one, I'm hyper analytical. So before I tell you these numbers, I do a lot of research. I use the St. Louis Fed. They have a great website, which I'll put here. And you can pull any MSA and detail anything you want about the MSA. So my data comes from a number of sources. It comes from that, which is, again, a number of PhDs that are tracking a ton of data. I use a fantastic website produced by Redfin, of all places. They have a free data center that extracts historical data and it helps you understand, inventory supply, listing prices, days on market, and a number of other categories. And they do it not only by the MSA, they do it by the city and by the product type. So all my numbers are relating to single family homes because that's where I think the money is going to be made here in the next several years. And the last thing I'll say is my background. Real quick, finance guy, taught up all the way up through the start of my PhD at Cornell. So I've been in the idea of analyzing data and finance data through my entire life, right? I've been investing in real estate for almost 12 years now, and this is what I love to do. So this is not some clickbait nonsense that you see people, posting a housing crash picture just to get you to watch it. This is true data. And if you notice, I'm one of the only people out there talking about appreciation in the market versus what you see as depreciation. So with that said, lastly, big favor, if you would subscribe, that helps me with that motivation to keep giving you this content. So let's get started. San Antonio. I don't know if you've been there, but it's an interesting city, right? It's full of old Capitol buildings. You can feel the history when you're in San Antonio, a decent food scene in this water walk that's pretty famous. But what else is going on there? Well, first, we know there's several military bases there that provide quite a bit of jobs and stability in the market. But I'm going to walk you through a number of pieces of data here. And if you stick to the very end, I'm going to show you the top 3 rental markets in that city that I'm looking to invest. Okay. And we'll put that at the end of the video once we get through all the data. But I want to first walk you through a few things. Okay. And I'll share some charts throughout this to help you understand how I come up with these numbers. But what I've been doing is essentially I analyze a number of things. I analyze affordability in the market. I analyze the average home price. I look at the population growth rates, the new permits coming out on market. I analyze all that, and then I factor in a number of variables to essentially normalize all that to a solid number. And what I come up with, and in this process, by the way, has been fairly accurate in my since 2015 that I've been doing this. I come up with a 23 to 28% forecast appreciation over 36 months in San Antonio. Now, it's interesting how this is going to work. I think the biggest appreciation year is going to happen in the next 12 months, potentially up to 9%, and then teetering off to 7-8% year over year thereafter. Now, one of the unknowns that I'm having a hard time dealing with is Austin, as we all know, is the fastest growing city right now in the United States in jobs and wages and price appreciation for homes, you name it. I do believe there's going to be an influx of population from the Austin market. Keep in mind, it's only an hour and a half away from Austin, San Antonio is. And so all these data that I'm sharing with you doesn't include the impact of that migration on that population. Okay, so if there's any additional population from Austin to San Antonio, you could expect prices to even increase faster. So a few key things, right? From the year 2000 to the year 2020, the average median income growth rate has been 3%. Now, if you were to compare that to the national average, it's right around about the same. We've seen about a 3.1% median income increase over the course of 20 years in the United States. So, a little better than inflation, not fantastic. But now it's important to know, again, San Antonio has been a more affordable market across Texas than, let's say, that of Dallas or Austin, okay? Another thing that to keep in mind is if you look at the city GDP over 20 years, growing at a very nice pace at about 3.2%, right? So we expect to see the GDP to continue to grow in San Antonio as it is a growing city, right? The average home price has appreciated 4.2%, okay, over the course of 20 years. So not a bad clip. So what that tells me is that we have a foundation of about 4% of appreciation happening just San Antonio. And again, if you look at my other videos, the National Association of Realtors across history has predicted around a 4.3% appreciation rate across real estate. So it's not bizarre at all to see that income is close to national average growth rate, GDP is close to the national average GDP or growth rate, and so home price has been fairly consistent as well. But what's been interesting is there's a lot of changes coming, right? Now, one of the things where San Antonio does excel across the nation, back in 2000, the population was 1.7 million. Today, it's 2.6 million. So a million people have moved there in 20 years. I expect that to grow even faster, okay? Which, again, keep in mind, real estate supply and demand. So you're going to have a faster amount of population and demand on homes. And to support my point on that, if you look at new home permits, right, and the growth rate of annual increases to that, new home permits have grown annually at 2.4% versus a 2.2% of resident population. Now, that would seem like they're oversupplying the market relative to the population. But if you look at the housing supply, which I'll show here, you can see we're at a 1.7 month supply, right? Keep in mind, 6 months is a balanced market. We have a massive shortage across the nation. We have a massive shortage in San Antonio. So that's going to continue to offset that supply and demand curve, ultimately leading to price appreciation, okay? So that's really important to know. But here's the big one, and here's what I'm going to tell you when it comes down to why I'm really estimating this number. And again, the first thing I look at is macro. I want to understand, okay, do I have enough argument based on a diverse economy? Again, and what I'll show here, you'll hear in this graph, is effectively a diverse economy, right? With the one headwind of there's substantial amount of their GDP coming from gasoline and energy. I think with Biden, he's probably going to have a big push towards green, climate, focused energy. Could be some headwind from the GDP standpoint on energy and oil, but I think we'll be just fine in San Antonio. So back to my point, though, if you look at essentially what was the cost of a home in 2000 versus the median income, right? And if you look at that, people spend about 52% of their overall income on a house. And that includes property taxes, mortgage, insurance, PMI, any of that, right? In 2010, when there was a crash, keep in mind, San Antonio was one of the markets that was hit by that pretty hard. The average amount of money spent on a home was 44%. So people spent 44% of their income on a home. So lower than 2000, but still pretty high, 44%. Today, it's at 36%. They're spending 36% of their income on a home, and yet home prices have continued to increase. Now, here's what I'm going with this. I expect with our cheap debt that people will be willing to spend about 40 to 45% of their income to buy a home. Now, if you do the math, where does that put prices today, which is, again, the average home price in San Antonio is $256. What does that mean for future prices? Well, I see no reason that home prices on average won't go to at least $315,000 in San Antonio, right? That would get you to about a 43%, give or take, amount of income being used for home or for their home, right? That would be a 23% growth rate over 3 years, just using that basic math. Now, if all my logic holds up, if the economy remains strong and diverse, if the fundamentals stay strong, if the population increases, if GDP continues to increase, and if the income continues to increase, which I think it will, I think at the very minimum, we're going to see a 23% appreciation in San Antonio. Now, when you factor in the other elements, right, the influx from Austin, you have what I think will be a robust 2021 appreciation of San Antonio if that happens. And if I'm actually being too conservative in my numbers, which I might be, I think this could be a 30 to 35% appreciation market on the upside. What am I saying? Net, at the end of the day, I think a 23% appreciation rate for San Antonio is the floor, up to a 35% upside in that market. So really big numbers, very attractive. And the bonus is, and I'm going to give you this right here in a second, you can buy rentals in this market that cash flow and cash flow at a pretty good return on your money. So I'm heavily looking at San Antonio for my next city. And I'm going to share here in some of the top rental market areas that I'm looking at to do just that. So again, I would love to hear your comments. How are you positioning San Antonio, if at all? And how do you go about predicting price appreciation in markets? Talk soon.